In today's video, I'm going to show you how Geroge Soros basically made $60 million in 36 hours. And I'm going to show you how the trade triangles actually beat George to the punch. So let's get started right away. Okay, what we're looking at is a graph, a daily graph of the Australian dollar versus the US dollar, going all the way back to April of 2008. As you can see, we moved from about the 65-cent level all the way up to about the 105 level, possibly even the 110 level if you look at the very, very high. But the reality is Geroge Soros made a series of 3 trades just recently and made $60 million. I want to show you how he did that and how the trade triangles were actually there before Geroge Soros. So let's get started right away. Okay, so we've shortened the time frame up dramatically, and what we're looking at is just a 1-month chart, a candlestick chart of the Australian dollar versus the US dollar. And we're going to put our trade triangles in, but first let me show you where Geroge Soros shorted this market based on the rumors and some of the trades that were placed in the Far East and Asia. So let's just put the first trade in, and that came in right at this date here. Now that's the 5th of May. Now as rumored, now remember our charts are based on US time frame, so the 5th of May here is actually the 6th in Australia. So again, this is where the first trade went on, and he did a 36-hour trade. Basically he made $60 million, about $20 million per trade on 3 lots of $1 billion. So super trade for him. But let's take a look at where the trade triangles came in. Show how the trade triangles work. We just have to go to the trade triangle box right here, the trade right here, and we're going to choose the weekly because that's what we use for Forex. That's the intermediate term trend. And here it comes in right here on April 15th at 103.54. Now you can see below here all of our trade triangles are negative on this market, indicating a lower trend. So while George got in right here, we actually got in much earlier and much higher. Now we also trade these trade triangles using weekly and daily. So the first signal was right here, 103.54. Now I put the dailies in, and you can see we covered that position at 103.06, about a 50-cent profit, which is very nice profit, not huge, but very nice. We then moved back into this market on the 1st of May at 102.74. Now that's because the trend based on our weekly trade triangles was down, and we wanted to trade only with the direction of the trend. So the trend is down, so we caught the market moving down to the 101.76 level. So very nice profit in there already, and it looks like it's going to continue. So let's look at the big picture and see how we can improve this profit margin. Okay, so this is the bigger picture. This is going all the way back to July of 2008. Actually, we can go back further, but this is the lowest recorded price we've seen in the Australian dollar for quite some time, and that was in the October period of 2008. So that was around 65 cents. Let's call it 65 cents. And this is the highest recorded price, 110. And then we've been really trading around the 105 level for quite some time. Now, according to the Economist Index, the Australian dollar is 12% overvalued, which means it could come down 12% just to regain parity for the number of other markets. But I think what is going to happen, it looks as though this market is making a big top. And when we put our trade triangles in, you can see that all of our trade triangles are negative, indicating a strong downward trend. You can see our last one came in here at 102.79 on the monthly, which means super long trends. To get a close look up on what we can see happening. So let's just take the trade triangles off. Let's put a very simple tool that we use called a trend line, and you go from the lows here and simply draw that trend line in, and as you can see it intersects right around the 90-cent level. So currently trading at 101.76. So we also then move to our Fibonacci tool, which is a very powerful tool to use. You click from the highs, drag it to the lows. So this is the lowest period we've seen in the Australian dollar right here. Actually, I was in Australia at that time. Great bargains. And this is the highest period we've seen. So it would indicate that we could see a 38.2% correction, which takes us down to about the 91.5-cent level, or a 50% correction, which takes us down to 85, or a full 61.8% correction, which takes us down to around 80 cents. Now, the key thing here in my mind is this point right here. I'm going to show you what that point is. So let's take a look at that right now. So here we are. We're going back to June of last year, and this is the key point to look at right here. And the low close there was 101.29. So any close under 101 is going to be disaster for this market and will really start a run on the Australian dollar. So watch that very carefully as we see that as an opportunity. Now you know where we're looking for the market to go, right around the 90-cent level, and that's a huge move in the Aussie dollar. Thanks for watching this video. I hope you found it helpful.